Hello everyone, and thank you for tuning into the North Main Minute. I'm Joshua Doby. Big item that's come back on the radar screen here, and I'm smiling and maybe even chuckling a little bit because this is so predictable. It happens every single time, is the investment in gold or investment in hard metal commodities. Now, the reason why I'm smiling is this comes up back on the radar screen every time that there's a significant increase in the price of the commodity, which is what we've seen here recently. Actually, just recently, as of the time of this video recording, we hit an all-time high. So definitely high on the radar screen. You're starting to see the late night commercials about how you need to invest in gold. So let's break it down in just a couple of seconds here. First of all, when we're investing in gold, there are a couple of different ways to do that. One, you can invest in the bullion or in the coins themselves. You want to be mindful of that from a liquidity and pricing standpoint. A lot of challenge in finding good pricing points whenever you're doing that kind of thing. You can also invest in commoditized assets, meaning you can invest in exchange traded funds, for example, which track the price of gold. So you're not investing in the bullion directly, you're more investing in an instrument which tracks the pricing. So you get the benefit and also possible downside of that pricing movement, but you have much better liquidity. So a couple of different ways. There are other ways as well, but first I want you to be aware of that. Secondly, as I just mentioned a few moments ago, we just hit an all-time high in terms of the price per troy ounce as measured on the London Stock Exchange, which is the benchmark around the world for traded gold. Now, again, I'm shaking my head a little bit and maybe even scrunching my eyebrows a little bit. And the reason for that is be very cautious. Gold, like just about every other investment asset out there, is a cyclical asset, meaning that there are highs and there are lows, and it moves between those highs and lows with some regularity. So the fact that we happen to be at an all-time high here, I'm not saying it can't go higher, just be leery of it. Be leery of the price that it is right now. Be leery and be cautious about thinking in a straight line. That just because it went higher doesn't mean it's going to go directly higher from there. There may be a cycling out a little bit. Not saying there will be, I'm saying it's a possibility. Make sure you have that in your planning mechanism. Third, when it comes to investing in gold or considering gold or keeping it on your financial planning radar screen, make sure that it's a proper allocation relative to your overall portfolio. It can become, let's say, tempting, especially during times of concern and fear about the economy, to invest in more safe assets. I'm not saying that there is inherently anything wrong with that. Just be mindful of that combination with regards to your overall portfolio. I'll put it a different way. You want to make sure you don't get too heavily concentrated in any one particular asset. You want to make sure you have some savings, cash over here, maybe some gold over here, maybe some equities over here, bonds and debt over there, maybe some real estate if appropriate for your portfolio, all kinds of possibilities out there. You never want to put all of your eggs in the proverbial one basket. That's where it can get dangerous because your fortune then is moving based upon that single movement, and that's where things can get tricky and scary. If you'd like to reach out to us at North Main Financial Group, talk about gold as a commodity or as an invested asset, how it fits into an overall portfolio or not, be happy to talk with you about it. Reach out to us at northmainfinancial.com.